Hi, welcome to my session here. My name is CA Mohit Makhija. Not take much time and start going with my brief session on finance and accounting. What is finance and accounting? Just some briefs and basics about it. Whenever any business transacts with its consumers, so it sells or it intends to sell its products and services to its consumers, and in return, their consumers who find those products valuable to them pay the value quoted by the business against those prices in form of money, which is obviously the price of those goods or the price of those services. Now, obviously, when these two parties interact, a business and the consumer, there is a transaction happening here. Now, any transaction which is taking place needs to be recorded. Now, that is all in simpler terms accounting is about. Accounting is just relevant to taking care of uh, absolute and precise recording of the financial transactions in most appropriate manner, although it entails recording, but it entails certain rules and certain fundamentals which needs to be adhered to. So accounting is a very subjective field. When I say recording takes entailment of adherence to rules and laws, and some fundamentals governing those record keeping, because a particular transaction may be recorded by an accountant in a different manner, whereas another accountant may record the same transaction in another manner. So it is subjective assessment of a particular transaction by the relevant accountant, also in cognizance with the relevant situation in which the same accounting is taking place. Now, just to bring topic to simpler terms, I will just take your attention towards accounting equation, a fundamental concept in the field of accounting, where we just start with the accounting. There is a concept called accounting equation. Now, accounting equation, anyone who studies accounting has to just first study this to start with as a fundamental. Now, accounting equation, as the word suggests, is an equation which shows the equilibrium between certain variables of accounting. Now, what are those variables of accounting? Those three variables, to simplify, are assets of a business, liabilities of a business, and capital. Now, what are these terms? Assets, liabilities, and capital. Now, asset, as the word suggests, is in general terms, is a particular underlying commodity, or a thing, or an object, or an intangible value, intangible thing which may possess some value. So those underlying objects would accrue some benefits, or in economic terms, to the business or to the owner of those assets in future, or in value terms, and they may have some current value as well. So anything which entails some economic benefit are assets, right? For example, machinery, stock of goods, or furniture, or assets in form of cash and bank balance, or some sundry debtors, receivables from the customers. All these underlying items would at any time possess some economic benefit, accruing, or economic inflows of resources accruing towards the owner of those assets. Now, what are those liabilities in contrast? Now, liabilities are basically the obligations of any business, or the person who is owning those liabilities. So obligations obviously are in the economic sense. So any liability would entail outflow of economic resources from the business. And for example, it may be creditors of a business, or it may be a loan repayable of a business, or it may be obviously also any sort of a term loan, or a kind of a the uh, current liabilities in form of tax payables, or any kind of taxes payables also, or dividends payable for that matter. So as we can understand, any of these items, which may be dividends payable, or taxes payable, or creditors payable, these entail the outflow of the economic resources in form of money, cash, bank, to outsiders from the business. Now, so we have understood here what are the assets and what are the liabilities. Now, how does these play, and what is capital therefore? Now, capital is a differential between assets and liabilities. So at any particular time of a business life cycle, the business would have certain amount of assets, and it would also have certain amount of liabilities. Now, those liabilities and assets would most likely not be in equal terms at all the times. There would be some differential. And in general, mostly it is positive difference. What I mean is, assets would certainly, in most of the cases, would be higher than liabilities. So that differential between assets and liabilities is capital, although it is not necessary that in all the cases the capital would be positive value only. It may also be a case where liabilities may be in excess of assets, in which scenario it would be a negative capital. What it means is that business has more obligations towards outsiders than it has receivables from outsiders, in which case it's an adverse scenario of a business. Now we have understood what is assets, what is liability, and what is capital. Now let's try to place them in form of an equation here to understand what is accounting equation as such. Now, accounting equation is a fundamental concept in the field of accounting to understand with, because everything from here will stockpile based on this pillar of accounting equation. So this is a very fundamental concept to be understood. So if we have understood this properly, most likely we will understand easily the other piling up topics, because this is the basic concept. Now, assets as we discussed is a differential of capital, as we understood, is the differential of assets and liabilities. So if we just try to put this in arithmetical terms, we can do it this way. Like, in left hand side of an accounting equation, we can put capital, and in the right hand side we can put assets minus liabilities, right? So this equation of left hand side and right hand side just explains the equation as such. So any differential between these assets and liabilities will equal always at all times to the capital on the left hand side. Now we can also do this, understand this with through some examples. For example, I'll just take some simple example. Just let's just take basic transaction. Let's say ABC. Let's say A started a business with a capital of rupees 10 lakh, right? Now, if we just have to, this is also a transaction. If a particular proprietor or a owner or an individual brought some funds in form of a capital into a business, now this is a transaction happened here. Now, how do we put in form of accounting equation? There we can just, it's just a simple thing. Capital would be on the left hand side, as we just discussed in our accounting equation format. And once the cash or the bank balance is brought in into the business, the asset gets inflated. So we are increasing the asset on the right hand side. There's no transaction happening pertaining to liabilities in this one. So on the left hand side we have 10 lakhs of capital with this, and on the right hand side we have 10 lakhs of cash or bank in form of asset in this kind of a transaction. So it is not necessary that in all the cases all the variables will play around. It may happen that any particular variable may get changed due to some transaction, but it would always be objective and it will always be subjective, and it will, therefore it will be interesting to see how it plays around. So just further going down as to understand this further. Now let's take another transaction. Uh, Brought furniture. Let's say Mr. A bought furniture for rupees 1 lakh, and a check was issued on the same day, right? So what is the transaction happening here? Mr. A, the owner of the business, has brought some furniture for rupees 1 lakh in the business, and a check was issued to the vendor who from whom this furniture is purchased on the same day. Now, what is the transaction that has happened here? The furniture is an asset, is a fixed asset in form of in the business, which would be benefiting the business for its use in different aspects as required. And to compensate the vendor for the purchase of this furniture, the business is paying a check for the same amount to the vendor. So in that case, the bank balance is getting reduced, and the furniture in the form of fixed asset is getting increased. So again, updating the same accounting equation, what we would do in this case is, the capital on the left hand side would remain same, but on the right hand side, one asset is getting increased, and on the other hand, the other asset in form of bank balance is getting decreased. So furniture is getting increased by rupees 1 lakh. On the other hand, the bank balance is getting decreased by rupees 1 lakh. So therefore, at the same time, the accounting equation remaining equal, still after we do these changes, the accounting equation still remains the same. So let's take another example again to better apprehend this. Mr. A bought plant and machinery for business for rupees 1,10,000, and an advance of rupees 10,000 is paid in cash to Mr. Raman, who is the vendor. Now, what is the transaction that has happened here? So this would be interesting because all the variables in form of liability, in form of capital, in form of assets are getting updated here. Now let's see how this is playing around. Now the plant and machinery, obviously it is an asset for the business. It is getting increased by rupees 1,10,000. So on the asset side we will increase rupees 1,10,000 because it is coming in the business. And on the other hand, to compensate for this purchase, an advance of rupees 10,000 is paid to the vendor. So therefore, the asset in the form of cash balance is getting decreased in the accounting equation by the amount of rupees 10,000. But what about the balance 1 lakh rupees? Because the total purchase of machinery is valuing rupees 1 lakh 10,000, and only rupees 10,000 is being paid in cash to the vendor. So therefore, the balance 1 lakh is still unpaid. It is payable. It is, when we say it is payable in future, maybe it may be a current liability or a short-term liability for that sense, or it may be a long-term liability. uh, that is a different classification. But at the end of the day, this is still a liability. So therefore, we are increasing the liability here. Okay, so we are increasing the asset in form of plant and machinery for rupees 1,10,000, and to compensate that, 10,000 is getting decreased in form of cash. Therefore, in 10,000 rupees is getting decreased from assets, and in addition, a liability is getting increased for rupees 1 lakh. So if we see this, so in effect, 1 lakh is getting increased in cash, sorry, in assets, and on the same side, 1 lakh is also getting increased in the liabilities portion. So if we have to just square it off, or we have to just deduct, get the differential will come zero, because the net increase in assets is rupees 1 lakh only, and the net increase in liabilities is also rupees 1 lakh. So if we deduct 1 lakh from rupees 1 lakh, the differential we know would be zero. Therefore, the accounting equation after doing these adjustments will still remain balanced, and therefore the left hand side and right hand side will remain equal. So this is how we see, how the transaction is playing, and how interesting it gets, analyzing and taking adjustments for respective transactions in the accounting equation. And similar things are further enumerated in form of accounting entries and ledger posting and financial transactions. All those things are advanced level of postings and record keeping only, but still the fundamental would always and always remain this, as is depicted in this accounting equation. So it is very insightful, and it is very important to understand this properly, because this is the basic fundamental of any accounting transaction to be recorded. Okay, let's just take one more example and then we just wrap it up for now. Goods purchased for from Mr. Akshay Traders for rupees 55,000. Again, just repeating it. Goods purchased from Messrs. Akshay Traders for rupees 55,000. If we just analyze this transaction, uh, what it is conveying is that goods in form of stock has come in into the business for rupees 55,000, and the Akshay Traders, who is the vendor or the supplier, he is owed by the business rupees 55,000. When we say owed by the business, we mean that business needs to pay rupees 55,000 to Messrs. Akshay Traders. Now, whether we have paid this as of now, if we would have paid this as of now, this transaction would have entailed that payment of rupees this much by cash or by a bank or through check has been made to Mrs. Extra Traders. But since it is not mentioned here, it simply implies that the payment for this purchase is still pending. So when we stay or when we infer that the payment of for any purchase is still pending, it means we are creating a liability here. A business needs to pay this amount as a future outflow in foreseeable future. So therefore, through this transaction we are increasing our assets in form of stock of goods by rupees 55,000, and at the same time we are increasing our liabilities in form of sundry creditors as payables for rupees 55,000. So again, just analyzing the impact on the accounting equation, how it's playing around, the capital would still remain same, because on the one hand, in the assets portion there is an increase of 55,000. On the other hand, there is a decrease for rupees 55,000 in the liabilities. So the right hand side, 55,000 minus 55,000, the net difference comes to zero, and therefore the capital remains intact as was earlier prior to this transaction. So just to sum up now as a brief session, this is how we analyze how the accounting equation plays a role in recording all these transactional movements of between the variables of assets, liabilities, and capital, and at all times this is also a check for an accountant to ensure that the accounting is happening properly and without any error. So just any advanced level or any typical or most complicated and sophisticated level of transaction also may be checked with this simplest way of check only, that at all the times this left hand side and right hand side will have to match as equal sides always. So if we are ensuring this much of conceptual clarity and conceptual check all the times in the accounting uh, pursuance, we are sure that we would always make sure that the accounting, whatever is happening correctly and accurately. Obviously there are different advancements of how to classify, how to how to disclose certain transactions. That is, those are the future advanced level branches which we can further understand as we go further along. But the main thing to understand is that the conceptual part and the fundamental pillar of any accounting is this equilibrium between assets and liabilities differential equaling capital on the other hand. Okay, so just closing and wrapping it off and signing off from here. I hope you enjoyed the session. There might be some shortcomings. I would love to hear your feedbacks and comments to make myself further improvised and better, and so that I can add much more value in upcoming sessions for my audiences. Thanks a lot, and thanks for watching me.